Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Our goal is to help you improve your returns by keeping you up to date with everything you need to know. What helps investors beat the market is information and knowledge of how to use it. We'll provide you with both. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. Today is the first options expiration date of 2024. For those that are unaware, the third Friday of every month is options expiration for the stock market. This week, we saw jobless claims and retail sales give a positive sign of strength for the economy, whereas we had the New York State Manufacturing Index, existing home sales, and housing starts give us a surprise to the downside, a sign of weakness for the economy. Coming into today's trading session, we have 61.4% of stocks trading above their 50-day moving average. That's down from over 90%. This means that much of the market is now at resistance as opposed to being at support. But most of the market is still at support and holding up relatively well. Over the past week, if you've seen any positive returns out of your portfolio, you've likely been getting that performance out of technology and communications. And you could have done well in industrials as well if you invested in transportation over that time period. Utilities, basic materials, and real estate are the worst performing sectors over the past week in that order. I'm looking at this as a potential opportunity for us to get more defensive in the event that there is a potential downturn for the economy. These sectors will definitely give us some really great performance. Year to date, communications, technology, and healthcare are the top performing sectors. Basic materials is the worst. We've said it time and time again, a rising tide lifts all boats. The market is at all-time highs, and yet 8 out of 11 sectors are in the red. This tells me that investors should be very careful, especially since 3 out of 5 worst performing sectors are sectors that would perform well in a recovery or at the early stage of an incoming expansion, right? Now, all in all, my advice to the market today is to tread with caution. The 10-year Treasury, which works against growth, is making a relatively strong move to the upside. Now, make no mistake, there are stocks out there that are trading at attractive levels, but the market as a whole is far ahead of whatever earnings growth may come. From a technical perspective, this may be why we're witnessing a divergence between price and relative strength. Closing out this week, investors should be just as serious about hedging as they are about picking up stocks. I have a few stocks in my portfolio that are hitting all-time highs today as well, but that doesn't make me want to get more risky and go out and buy the market. Those highs are coming from names in spaces like semiconductors and artificial intelligence, as well as transportation. Outside of that, 2 of my best performers are in finance, as they've just had earnings recently. My worst performing names are in clean energy and basic materials. So again, this is definitely not suggesting that we're very optimistic about growth looking forward right now, which is why I am telling investors to, tread with caution and be aware of what expectations are for growth as you look at certain particular stocks from day to day. The Equity Channel is one of the most followed stock market podcasts for beginners, a valuable resource for investors who are looking for information on the stock market and the economy. We love to make our episodes quick, straight to the point, and rich in value. We hope that's what you got today. Be sure that you subscribe, turn on your notifications, because every time we drop a new episode, money is made.